Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I am Hiral Dadia. One space that is in focus is the FMCG sector. Clearly, if you see, it's actually outperformed the benchmark indices as well as sectoral indices in 2023. No one's really realized that, but the way it's moved up 21 to 22% on a YTD basis versus a 7 to 8% kind of up move that we've seen on the Nifty and Sensex. It is the top performing sector in 2023 as well so far. And a lot of stocks that have led to this rally from the likes of ITC, Varun Beverages, GCPL, as well as a Britannia. But what's in store and what should investors do at this current juncture? Kaustubh Pawaskar, Deputy Vice President, Fundamental Research at Sharekhan by BNP Paribas, joins in. Kaustubh, good afternoon and welcome to the show.
Good afternoon. Good afternoon,
Kaustubh,
and
my first,
welcome to all the
yes.
viewers. Yeah.
Kaustubh, my first question coming to you is in 2023 itself, you have Nifty FMCG, which is the top performing sector, outperformed the benchmark indices and trade as well. What is your view? Do you think, uh, I know it goes slightly technical, but the situation is where FMCG companies are now overbought?
So if we look into past 6 month performance of the Nifty
Hmm.
FMCG as a whole, it has given a return of around 21% vis-a-vis if we look into the broader indices, Nifty 50 or Sensex, it has given a return of 6 to 8%. If we look into the entire Nifty basket, I think the major contributor to this gain was ITC, which moved up by around 40%, and its weightage to the overall Nifty basket is around 39%. Other stocks are also there, like Britannia, HUL, Varun Beverages. Varun Beverages, they have also clocked double-digit growth. Nestle has clocked double-digit growth. I think the run-up in the stock started when the sector got started seeing some green shoot in terms of recovery in the rural demand, which was one of the key laggard for the FMCG sector for past 1.5 year. And from quarter 4 of FY 2023, or rather Jan March quarter, there was some bit of recovery in the rural market, and also commodity prices declined from their high, and the benefit of it started flowing in from Q4 of FY 2020. So that is where the I would say the tailwind for the sector started flowing in, and I believe that that would continue in the coming quarters. So for quarter 1 also, we are expecting a strong margin expansion, which will help bottom line of most of the consumer good companies to drive double-digit earning growth, and this will sustain. Also, it will help FMCG companies to focus on recovering their volume growth. So as inflation is down, we are seeing monsoons to be reasonably well, though it was a slow start. But July was good, and if it continues to be better, I think it will give a strong push to the rural demand. Plus, inflation is moderating. The reduction in the commodity prices would help companies to pass on the price cuts or benefit to the consumers. So all in all, we should expect volume growth momentum to improve in the quarter ahead. Plus, the margin expansion would help to drive double-digit earning growth in the coming quarter. So that is what the FMCG companies are looking into, and that is why the performance of the most of these stocks have improved. And we believe that we have to be selective in this space, and companies having a decent valuation plus a good earning visibility from near to medium perspective should be considered as a preferred picks in the space.
Right. So, Kaustubh, point taken. Now, if you see the top five performers, ITC, Radico Khaitan, Varun Beverages, Britannia, as well as the Godrej Consumer Products. And if I have to look at a Bloomberg consensus as to, what's the 12-month potential target, all of them are giving me a negative return, right? So, what is the story telling you from a valuation to price perspective? Are these then becoming candidates for re-rating? Once we have the first quarter FY24 earnings out?
Obviously, so I believe that ITC, if we look at the current junction, still it is at a discount to some of the large FMCG stocks like Nestle or HUL or for that matter, large FMCG players. So I believe that there is a fair bit of upside left in the ITC. The company's performance has been really good for past 6 months, or for past 3 quarters. This quarter also, we are expecting good performance from ITC in terms of revenue growth, and as well as in terms of PAT growth. So I believe that there is a fair bit of momentum left into ITC, and we believe that from here also there would be re-rating in terms of price target and valuation in the stock. And I think ITC is one of the preferred picks. Britannia, Godrej Consumers, again for Godrej Consumers, we believe that the last 2 years the performance was impacted because the domestic HI business and the Indonesia business were not doing good. But now from quarter 4, we got some visibility that both the household insecticide business in India and Indonesia business will improve. And in the recent quarter update also, they have indicated that both these businesses will drive the growth in quarter 1. So from here also, GCPL remains a key re-rating candidate, and we believe that with management strategy of market development, distribution expansion, innovation, I think it would see a consistent growth in the quarters ahead and in the coming years. Britannia, I believe that it is expanding its market share gap, in the core biscuit category to the number 2 player, and also in adjacencies, it is doing extremely well. So both these factors will help Britannia's revenue growth to remain ahead of the industry growth, both in the biscuit and the bakery division. And from the margins point of view, also we have seen that despite the fact there is a raw material inflation, company is able to manage healthy margins in its core business. So that is something which will help Britannia to maintain that a premium valuation in the space. And I believe that from here also the stock looks good from the near to medium term perspective.
Right. So that's with few of the names that you're talking about from a fundamental perspective. If you look at a Marico as well, Kaustubh, we just yesterday got the Q1 update. Clearly, the urban demand has been steady. Rural demand, no changes that we've seen so far. The domestic business has reported low single digit volume growth. Uh, International business, high single digit constant growth. What are the numbers indicating to you?
See, Marico, this quarter, there is a one-off effect of the sorry, inventory destocking, which happened because in the edible oil portfolio,
Hmm.
the company have taken price cuts, and for Marico it was around 30%. And we have seen all other edible oil companies also taking the price cuts because it was required, to reduce the consumer inflation. So that and because of that, there was inventory destocking happen in this quarter. But management in its update has already indicated that they are seeing good visibility of volume growth recovering in the quarters ahead. They have taken the pricing actions in Safola and Parachute, which will help volume growth to improve. Value added hair oil also, with rural demand expected to come back, there also we should expect a good bit of recovery. And if new emerging businesses like food and premium personal care, I think that those businesses are doing extremely well, and that though they are expected to clock good revenues over the next 2 years. So that is how the Marico story stands out for. And obviously the commodity price inflation is lower, so I think from margin point of view also, Marico will see a good margin expansion in FY 2024.
Right. Apart from that, the kind of FI interest that we are seeing in the last fortnightly numbers, if you see, $171 million is what is pumped in the FMCG space between the 16th to the 30th of June. Kaustubh, any comments in terms of how the trend is panning out from the FI perspective? Are they seeing good interest in the India consumption story?
Sorry. Uh, yeah, so India consumption story, if you ask me, it is a long-term growth story because there are a lot of categories which are under-penetrated categories where most of the consumer good companies are focusing to invest. And if you talk about even the parents of some of the large companies, they are focusing on the Indian market. For example, Unilever or Colgate Palmolive or P&G. We have seen in the recent times the parents have indicated that they would be investing into the Indian markets because they are seeing a strong growth in India in terms of consumption. So that is how we should see the growth prospects are immense in the consumption market. Valuation is something which will definitely be looked upon, and that's why I said that we have to remain selective in the space. But in certain stocks, obviously it will be looked upon from a portfolio accumulation point of view. In some stocks it would be definitely a pure play investment from medium to long term perspective, depending upon the valuation.
Right. And this was an interesting point. In fact, I was just reading one of the stories or an article that was, published by Harvard Business Review, which was clearly indicating that the price to book ratio of a European consumer product giant, which is Unilever, actually stands at around 6. Whereas if you see in terms of the subsidiary in India, which is HUL, which is twice that number at almost a 12. And similarly, if you talk about Nestle as well, again, the price to book of 6, whereas its Indian subsidiary has a whopping 83. 3M USA, which has a price to book of 4.2, and the Indian subsidiary, which has a 12.7. And the list goes on with the BASF as well as Siemens. And the clear question was that if your company has a India strategy, and how important the India strategy is as a part of the entire business strategy. So just additional information in terms of the point that you were making. So overall, Kaustubh, my other question coming to you is, we've spoken about the valuations, we've spoken about what the price is indicating, what the growth prospects could be, and what's in store from here on. Two questions, a two-part question that I have now. First, someone who already is invested in FMCG as a space, is it time to actually book profits, number one, and move out of FMCG? And number two, and then again wait for some time till you get a re-entry point. That's number one. And for someone who is not owning FMCG as a part of the portfolio, what should they do at this current juncture?
So I would suggest that there would be a two-play strategy. One, obviously, as you said, that one who have seen a good or have seen good returns, or they can partially book profits in some of the stocks where the returns are quite high, and they can invest into some of the other stocks where we could see good returns over the next 2 to 3 years. So obviously, we have to churn out our portfolio from a return perspective. So I believe that there would be a good entry opportunity over the next 2 to 3 quarters, because some of these stocks, the valuation are quite high, and buying at current junction is not a good option. But obviously, partially profit booking can be done in these stocks, and we can enter into some preferred stocks where earning visibility is quite strong, and from the return perspective also, we have a 15 to 20% kind of a return over the next 12 to 18 months. So we can invest into some of these FMCG stocks and churn out our portfolio.
Right. So, from the list that you track, which are the ones which are potential candidates where, an investor should book profits, and which are the potential candidates where they should start holding a position according to you? How are you, how would you advise that churn?
From the preferred picks perspective, I believe that stocks like ITC, Britannia Industries, Jyoti Laboratories, Mrs. Bector Foods, Tata Consumer Products, and Godrej Consumer Products. These are our 5 preferred picks where we can invest from next 12 to 18-month perspective, considering their growth prospect. From the churnout perspective, I believe that we can. Varun Beverages has seen a good return in the recent times. Nestle has seen strong run up. So where the valuations are high, Asian Paints is some of the stock where we can see a partial kind of a profit booking, and we can invest into some of these stocks where the return profile is much better.
Right. So I think that's going to be an interesting aspect that one needs to watch out for as well. I think, Kaustubh, thank you so much for joining us on the show. This gives a lot of perspective to the investors and viewers as to what should be done with the sector as a whole. But hoping to speak to you soon once we have the Q1 previews, which are in place, and we have stocks that start reporting numbers. We'll be happy to speak to you about the numbers and the expectations as well from a quarter perspective. Thank you. Stay safe and speak to you soon again.
Thank you.
So that was Kaustubh.